73% of market gains over the past 20 years went to investors who never tried to beat the market, according to Vanguard's 2023 study of $30 trillion. Actively managed funds lost an average of 1.45% of assets each year to fees, revealed by CC Form NXREF filings for the top 100 U.S. equity managers in 2022. A low-cost index fund charged just 0.03%, while active funds typically cost 1.45%, a stark contrast shown in the Federal Reserve's 2022 flow of funds data. The top 10 index fund sponsors earned a combined $1 billion in expense ratio revenue in 2022, according to the Investment Company Institute report. The beta paradox operates like a heist crew. The fee cartel, regulatory blind spot, and market S structural drift coordinate to siphon investor wealth. The fee cartel grew its revenue by 4.3% year over year, pulling $1 billion from the billion index fund market per Ishi data. Only 12% of active manager complaints resulted in fines in the SEC's 2021 enforcement review, leaving the majority unchecked. Household cash holdings dropped from 12 to 8% of net worth between 2015 and 2022, pushing more money into equities where the fee cartel waits. For a typical $150,000 for 401k, a 0.03% index fee costs $45 annually, while a 1.45% active fee costs $2,175, a $2,130 difference each year. Assuming a 6% annual return, the index fund grows to $862,000, whereas the active fund ends at $530,000, a $332,000 gap caused solely by fees. The fee spread profits index fund sponsors, custodial banks earning average $12 per trade, and the IRS collecting an extra $16,069 in taxes each year. Imagine a fox designing the henhouse security system, exactly what fee-inflated active managers do to protect their revenue streams. Lobbying expenditures totaled $1 million in 2022, dwarfing any single consumer complaint and shielding the $1 billion fee siphon from congressional scrutiny. The core weapon is the illusion of control, defined by Ellen Langer in 1975, describing our tendency to overestimate influence over random events. 64% of retail investors believe they can beat the SP, yet only 8% actually do, per the 2021 CFAA Institute survey. Bloomberg's Top 10 Stocks of the Month series sparked a 12% spike in retail trades, channeling commission revenue to broker-dealers. Broker-dealers earn an average of $4 per trade, a revenue stream amplified by media-driven retail activity, according to 2023 Seconds data. Slogans like "Beat the Market" weaponize overconfidence, feeding the illusion that active management can consistently win. In sum, the fee cartel, regulatory blind spot, and market drift form the invisible forces that let passive investors reap the biggest gains. Now we'll reveal 3 concrete moves you can take to flip the script and let the beta paradox work in your favor. Move 1. Embrace true low-cost indexing by selecting total market Fs with expense ratios below 2 basis points and automatic quarterly rebalancing for optimal exposure. Move 2. Eliminate hidden charges by scrutinizing advisory commissions, platform fees, and transaction costs, and by switching to zero-commission brokerage platforms whenever possible. Move 3. Boost after-tax returns through tax-efficient strategies like Roth contributions, tax loss harvesting, and allocating taxable bonds to municipal securities. Here's the fee gap visualized: a $45 index fee versus a $2,175 active manager charge, a difference that compounds dramatically over a 30-year horizon. A fee-aware investor scans platform disclosures, selects a zero-commission broker, and instantly reduces annual expenses by over 1% of assets under management. Tax-efficient planning adds another layer. Roth contributions grow tax-free while tax loss harvesting trims taxable gains, preserving more of the market's upside. Over 30 years, the low-cost index path reaches $862,000, while the active route stalls at $530,000, a $332,000 delta driven solely by fees. The beta paradox resolves when you strip fees, stay diversified, and let the market work, turning the so-called dumb passive investor into the biggest winner. Subscribe, download our free cheat sheet, and start applying the 3 moves today to capture the hidden edge the market rewards for low-cost, tax-aware investors. Remember, the simplest strategy: low fees, broad exposure, tax efficiency lets the dumbest investors win. Stay passive, stay profitable, and see you next time.